Hello, and welcome to the Wade Borth podcast. I'm Wade Borth, your wealth strategist, and today we're going to be continuing on an idea that we did on a previous podcast regarding what is the infinite banking concept. In the previous podcast, I talked about, and again, you can go out to sagewealthstrategy.com and read the blog or grab the podcast there as well. And listen to what is the infinite banking concept from a process. And the way I break this down for clients and agents is that, the infinite banking concept is a process about how we think about money. It's not a product, it's just a process. And then the next question is, well, what products are we using to support that process? Because like anything else, we have to take this from theoretical to practical, right? So we have to put it in practice. And so one of the questions I get all the time is like, hey, I'll tell them, they'll ask me what I do. And I say, well, I teach infinite banking concept. And they'll say, well, what's that? And I say, it's a way that I help, hundreds of my clients, take millions of dollars and take back the financing function of their lives and their businesses, which is the most important thing that they can do financially, is take control of that banking function. And so from a concept standpoint, that's what the infinite banking concept is. Now, what we have to understand is, the three concepts we talked about in that previous podcast was it takes three things. It takes time, money, and discipline. Well, time, again, it's maybe not even your lifetime, maybe it's intergenerationally. So we take it into the multiple generations. The second thing that's really important is that you have to capitalize. Like any other business, you have to put money in time, time to understand what you're doing and understanding the process, and then money to make it work. Because again, we're talking about the banking, the financing function of your life, the banking function of your life. And that, like any other business, has inventory. And that inventory just happens to be cash. So the question that we're going to ask today and what we'll hopefully answer today is, where are we storing that inventory? How are we storing that inventory? And why are we doing what we're doing? And again, a third aspect of that before we move on is it takes, again, time, money, and then the last one is discipline. Discipline to understand that this is a long-term process, not a short-term gain. So the question today is, where are we storing our money? And I share with clients and other agents as I'm mentoring and training them is that we need to store this in a place that's safe, secure, we can collateralize, and is guaranteed. And that just happens to be in a properly structured dividend-paying whole life insurance policy. Now, does it have to be there? No, we can do infinite banking. We can do the concept of infinite banking in a shoebox, quite frankly. We can do it really in any vehicle that's out there. The reason why I choose, and again, Nelson Nash, who wrote the book, Becoming Your Own Banker, chose a properly structured dividend-paying whole life insurance policy is because that was the only product that gave him what he needed in order to do that, which was, once money's there, it's guaranteed never to go backwards. And it gave him protection from creditors. It gave him the ability to, once money's there, it's going to grow and it's going to be professionally managed by the strongest financial institutions in this country, which are large mutual insurance companies that have been around for 200 years. So the idea that, why are we putting money there? It's because, quite frankly, that's where banks put their money. It is, again, we look at certain characteristics. If you're going to loan, if you're going to loan out $100,000 or $200,000 or $1 million or $10,000, whatever it is, and your account today says, you have $100,000 to loan out to either yourself, again, because I would encourage you to go back and listen to what is the Infinite Banking Concept podcast, maybe before this one, because again, it's about how we think about money and where we put it. Now we're talking about where is the best vehicle to put it. And so the reason why we do it into, again, a properly structured whole life insurance policy is that it's the only product that gives us all the characteristics that we need in order to be able to do this. My money will stay inside my policy, and I have guaranteed access through a loan provision in my policy to get access to those dollars. I'm not pulling the money out of there. I'm just using it as collateral to borrow from the largest, healthiest financial institutions in this country, which are large mutual insurance companies. So again, I'm borrowing money from the insurance company. I'm not taking my own money out. I'm leaving it there. And that's why that works so well, is that my money sits in this policy and continues to compound and grow for the rest of my life. And I borrow it from the insurance company. They collateralize my policy. And then I go do whatever it is that I'm going to do to grow wealth. Then with the discipline to make sure that I pay it back to the insurance company. So every dollar that I pay back to the insurance company, they release $1 of collateral. So it's like having this guaranteed line of credit, always going to be there. Unlike, it's very similar maybe to home equity line of credit, except for the fact that it's guaranteed that you can have access to it. Talk to people. My story back in 2008. I tell this story all the time, is that I was ready to do, I was going to borrow some money to do a home improvement project. We were all ready to go. We're ready to put, contractor was going to be here next week. I was going to use my home equity line of credit. And again, this was back in 2008. So I was practicing the infinite banking concept, but I hadn't fully embraced that I needed to capitalize my banking system as well as I had. And this is what drove it home. So I was ready to move forward. And again, this was in 2008. Good income, great credit score, everything was perfect for us. And we had a home equity line of credit set up to pay for this addition on the house. I had the contractor in place. He was coming next week. On Monday, literally on Monday, I get a letter. Well, let me back up. I go on to my bank account at Wells Fargo, by the way. I'll share this with you. Go on there and it says, I looked at my home equity line of credit on Friday, and I had access to the money that I need to pay for this project. Monday, I go on there and it's not there. I'm like, well, what's going on? And so I call, and of course the lines are busy. Nobody's there to help you. And I'm like, well, I'll have to get into that, figure out what's going on. Get the mail, and in the mail was this letter saying, due to the economic conditions, yours and everybody else's, in essence, line of credit has been suspended. So right there taught me a huge lesson in life. It's like I was dependent on somebody else to make a decision. I was dependent on them borrowing me money so I could go do what I wanted to do. And I thought, holy smokes. And so what I had to do, I had to call up the contractor. Says, hey, we have to delay this a little bit, because the money that I thought was there to pay you is in essence gone today. It was there on Friday, gone today. It's because they had the right and the ability to decide if I was going to have that line of credit. So why do I use properly structured dividend paying whole life insurance with a mutual insurance company? Is because I am guaranteed to have access to that line of credit. So why does Nelson say that's the best product to use? It's because it's the only product that's out there that says, once money's in that account, it's guaranteed for you to have access to it. It doesn't say, depending on the whims of, of the economic conditions or whatever it might be. No, it says you're first in line to get access to those dollars. And so that's what you need. That's what banks do. Again, I was saying this, if you want to do a little research, go on to fdic.gov, which is the site that all banks have to report to if they have FDIC insurance, obviously. And they report their quarterly holdings, their balance sheets and their assets and liabilities. And you have to dig a little bit, but look for their tier 1 capital. And tier 1 capital just means, what's their cash assets, right? What are they using for cash assets? Where's that money being held at? And this will fluctuate depending on each bank and in each quarter that they report. But Wells Fargo will have anywhere between 15 and 22, 23% I've seen as the high of their money sitting in life insurance and specially designed whole life insurance. Don't take my word for it. Look what Wells Fargo does. They tell you to put your money in their bank so they can turn around and profit off of it, and lend it out multiple times. The question is, why can't you take control of that function? If you understand the basic concepts, and again, that was my previous blog in regards to this, is what is the infinite banking concept? And then once you understand that and say, yes, I can take control of it, but how do I do it? What do I use to do that? Well, look at what banks do. They understand that they have to have a safe, secure, guaranteed access to money, a line of credit, that if they need it, they know that it's there. Night or day, it's going to be there. It's not going to go backwards. And there's not another financial product that can do what a properly structured whole life insurance product does. And that's why Nelson talked about it and said this is the only product that he thinks long term is the best. He knows. He knew it was the only product that should be used. Because what is a whole life insurance contract? It is a mutual contract between you and other people with mutual interest, mutual insurance company. So it's a voluntary contract. It's not a forced contract. You're not a customer of that insurance company. You are part of that insurance company. You're not using, or they're not profiting off of the products that you're using. You're part of that mutual insurance company. They don't have stockholders, and so, and this money is just professionally managed at an institutional level. Your money is professionally managed at an institutional level, with a guarantee never to go backwards. But it's a very long term. Again, remember, these companies have been around 200 years, some of them. And how many have failed? Go look up how many mutual insurance companies have ever failed. It's going to be a very, 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 very short list. If 0 is a good number, right? So do your research, take a look, get educated, understand that this is the reason why Nelson knew and understood this. And again, I'm referring back to Nelson Nash in his book, Becoming Your Own Banker. And I understand it as well, is that the product itself is the key to it is the fact that the money's guaranteed. It's not going to go backwards. So again, going back to my example, if I need $100,000 and I have $100,000 available in my policy to borrow against, to make a loan, maybe I'm a hard money lender, whatever the situation is that you need it for. Again, you don't need to tell them what you want it for. You just call them up or you sign the paperwork and say, hey, I need to borrow $100,000 against. Again, you're not pulling the money out, you're borrowing against it. You're going to say, I'm going to use this collateral, I'm going to borrow against it. And what happens is it's guaranteed. They don't ask you questions. The only question they ask is, where do you want me to send the check? So they're asking you, where do you want to send the check? Now, in your mind, you understand that now you have an obligation to yourself to pay that back. But the point is, we're in the banking, we're in the financing business. I don't want to call it the banking business because regulators have a tendency to want to jump all over that. But we're in the financing business. Personally, we're financing everything we do. We can talk about that and we can have a discussion. But we finance everything we do. And the question is, who are we choosing to work with? We're working with the entity that we own and control, which is ourselves, or are we working with somebody else's entity, which is Wells Fargo? And just applying the same principles that they do to our own financing functions, taking control of those functions. It doesn't have to be complicated. It's quite frankly, it's simple. And I think there's a lot of agents and people out there that think they understand this and they want to complicate it. So it seems like it's a whole lot more than it is, but it's pretty straightforward. You have an asset that's guaranteed line of credit. When you need it, you borrow against it, go do what it is that you're going to do to grow wealth, have the discipline to pay it back, and then repeat the same cycle over and over again. Again, this is what families of wealth in our country have done this for years, generations, hundreds of years. And all we're saying is that we can bring this borrowing strategy back down to what Nelson called, bring it back down to the you and me level. I have a policy with a mutual insurance company. You have one as well. We're mutually beneficial. If you borrow against your policy, go do what you're going to do, be profitable, have success, and then have the discipline to pay pay that inventory back to your insurance company. And again, that's the process of borrowing at the you and me level that Nelson always talked about. The Austrian economists talk about this all the time, is that all the other economic theories are top-down theory, where the Austrians kind of look at this as a bottom-up theory. We should be borrowing. If you need dollars and to start a business or buy land or run your farming operation, whatever it is that's important to you, that you want to grow your wealth, why do we have to do it at an institutional level? Why can't we come back and say, I want to borrow X amount of dollars from this individual? And it's done all the time, quite frankly, with crowdsourcing and hard money lending and that type of thing. So it doesn't have to be complicated. It can be fairly straightforward. But again, it's where you're storing your inventory so that your business, which is your finance business, is very profitable. It can be very profitable if you're your own customer, because again, you're taking back that function. But quite frankly, it could get to be more. It could go out beyond your family or yourself, and you can start now lending money. Again, I have a client, and I talked about this in the last podcast, that did just that. He went from being a borrower from a hard money lender to implementing the implement banking concept. So he was his own customer. Now he doesn't do anything. He flipped houses, and now he doesn't flip houses anymore. Now he's just became that hard money lender. Now having your money work for you is much more valuable. But again, where are we storing it can be just as important, because we want safe, secure, we want the things we want in our money that a properly structured whole life policy gives us is, liquidity, use, control, and guarantees of our money. Those are the key factors. And we can get into a lot of discussions, a lot of agents out there, well, you should be in this practice. I'm like, it doesn't give me all those things that I need, because wealth isn't going to be built there. Wealth is going to be built by the use of that money to go out and buy real estate, to go out and buy your business, to go out and take control of the banking function of your life. That's where the true wealth grows. Not the process of taking a loan or anything else. It's what are we doing with that money? What's the process that we're doing between our ears about taking control of the function, the banking function in our lives? So again, I'd like to have a little bit deeper discussion with you. Send me an email, wade@sagewealthstrategy.com with a Y at the end. Hop on the website, take a look. Read Nelson's book, Becoming Your Own Banker. It's a simple, short book, straightforward. He's a gentleman that when he wrote stuff, he was kind of a no-nonsense guy, so he wrote it pretty straightforward. He was my mentor when I first got into this and understood this about 15 years ago. So I've always appreciated the fact that I was able to learn from the guy that wrote the book. So, and I'm have a passion to share this and to have people understand that this process can be shared intergenerationally, where we can free ourselves from the bondage of institutional banking. No matter what your political side is or political bent is in today's environment, I don't see anybody that says I don't like to be, personally, I don't like to be part of the system that's there, because I don't, it's set up to be profitable for everybody else but me. So the question is, why don't I just take control of that function of why don't I take control of that part of my business and my personal finances, and I just bring it in-house. So again, love to have a discussion with you around that. Read Nelson's book, read what out. There's a lot of other material out there on that. Would love to have a discussion with you in regards to it, because it's a lifelong process. So it's not an event, it's a process about how we think about money, where we store our money, where we warehouse our dollars, our inventory, and then having the discipline to run it like a real business. Thanks so much for your time, and hope to hear from you soon.